This is Taking Stock on Bloomberg. I'm Pimm Fox. Now, it's been a difficult couple of years for the commercial real estate industry, but my next guest sees rents heading higher next year. We're joined now by an expert. We've got Bruce Mosler. He is the co-chairman of the real estate services and brokerage firm Cushman Wakefield. Bruce, good to have you with us on Bloomberg.
Than's for having me.
I know that we were at a Bloomberg Link
That's
conference.
Right.
You were giving me all the details there. On that morning at the Bloomberg Link conference at the New York Public Library, that was the day that there was the announcement of 805 3rd Avenue, the Meredith Corporation, consolidating all their New York operations into one location. Yeah. What kind of square footage were we talking about there?
Roughly 214,000 square feet, so it will be one of the largest transactions this year in Manhattan.
Now, is that emblematic of the kinds of transactions that you're starting to see? Is there a trend happening?
Yes. I mean, look, let's put this in perspective. Year to date, we've had 18.8 million square feet leased versus 16.3 in all of last year. So clearly demand is up. I think by the end of the year, we could see the numbers roll up to as much as 25 million square feet, which would make it one of the best years. That said, the demand is being driven by the price adjustment, and I mean the downward price adjustment of about 25 to 30 to 35%.
It's not that there's just this huge demand. It's that people are saying, all right, we need to figure out a way maybe to take advantage of the rents that currently exist, because they must be looking in their crystal balls, and you're looking in your crystal balls. What do you see in 2011 for commercial real estate rents?
Well, to your point, first, I think people are saying the market's bottomed. So let's take advantage of the market while it's at the bottom and before it rises dramatically. Secondly, I think that people are saying this is a moment in time where we can count on some growth. We've come through a very difficult period in time. Most corporations have right-sized or adjusted, certainly, over the past couple of years, their employee base. And lastly, I see growth next year simply because this year we're already beginning to see the signs of a recovery market. Less free rent, less work letters being issued. I think you'll see some rent rise at the beginning of next year simply because the vacancy rates are coming down and demand will stay up.
All right. Now, as someone that really is in the middle of these transactions, because you're really dealing with both sides, the people that are looking for this space, looking to take advantage of, as you say, this knowledge that maybe it has bottomed, and also looking to fill the space on behalf of the owners.
That's right.
Complex deals. At the conference, you talked about how there are some very complex deals out there, and that may have a factor in what actually gets done, because you've got people owning pieces of buildings and pieces of leases.
Yes.
That's an issue. Explain a little bit more.
We have a lot of things going on. First of all, you have high expectations by tenants in terms of rights and options and things that they expect to get, because the market still is not at that point where we can say it has recovered or it is recovering. We're seeing the signs. So high expectations by tenants on what they should get, rightfully so. On the flip side, we have landlords saying, you know what, I think that things are getting better. I just signed this lease for 220,000 feet. Should I push pricing? It's a very delicate balance right now. So our advice to people on both ends is, on the one end, yes, let's get what you deserve. And on the other end, we need to begin to think about, should you push pricing up a bit? Should we reduce the work letter and free rents? It's quite a balancing act at the moment, but I am optimistic. And again, everything needs to be tied to employment. Employment is the $64,000 question here. Will that come back a bit? New York has had growth in employment this year, 55,000 new jobs. Can we sustain that into next year? That'll answer a lot of questions.
I look at you as like the fulcrum of the industry. You know, you're like the center of the teeter-totter here. Now, if we move that teeter-totter outside of New York City, is the picture different?
It is, because we are almost talking about a tale of two cities when we move outside of New York and the major core markets.
Like San Francisco, Boston,
LA,
Washington.
New York, Chicago. You know, these are marketplaces that are holding up. Chicago, as you mentioned, 6 or 7 markets that are holding up where you're seeing signs of this recovery. And then there's the secondary and tertiary markets where things ain't so hot. So it is a bifurcated market. It's a bit of a tale of two cities, and one can say the same thing on capital markets where we are watching investors invest. It's a narrow band in the marketplace that we're seeing success.
I'm glad you mentioned capital markets and the investor perspective, because a lot of the public real estate companies, 2009, 2008, they were raising money, and they have to deploy that.
Yes.
Otherwise, someone's going to come knocking at their door, versus a private investor who maybe can sit and sit and sit and wait. Are you seeing that tension?
We are seeing that tension. Look, there's an extraordinary amount of capital sitting on the sidelines, not just in the U.S., but around the world. And if you look at the most invested in markets in the world, it's still China #1, Europe, and then the U.S. Although we are substantially ahead of last year. Just in New York alone, $9.4 billion closed year to date versus $3.5 billion in all of last year. Positive signs, but still challenges ahead. So, and again, bifurcated market.
All right, you're going to tell us when we get a new deal?
Absolutely.
All right, because that 8:05 deal, that was well-timed. Well-timed, Bruce.
Try to do that again.
Please. All right, I want to thank you very much, Bruce Mosler, co-chairman Cushman and Wakefield, sharing your knowledge and your experience in the real estate industry. Appreciate it.